it might be a great opportunity to add more US stock exposure to your portfolio. As we all know, the market is very worried about Donald Trump implementing tariff on foreign countries because it could potentially lead to trade war. This whole thing is causing a lot of market panic. And for companies that conducted the earnings conference call from December 15th, 2024 to March 6th, 2025, record number of companies mentioned the word tariff, and this is 259 times. It's actually higher than the previous record of 185 times happened during 2018 during Donald Trump's first term. The market is panicking. The VIX, or the fear index, is high. It's currently at 23.37. It's the second highest value in the past 12 months. The last time it was higher than this was in December of 2024. And the time before that was August of 2024. So this appears to be a very rare opportunity. And going against the market sentiment is sometimes rewarding. Okay, and right now the sentiment is fearful. Volatility creates opportunities. It pushes the exchange of stock ownership between the weak hands and the strong hands. This strategy I'm about to present to you is kind of like the dollar cost averaging, but it's a little bit more active than that. So this chart I'm showing you is the fear index, or the VIX, on top, and the S&P 500 stock index at the bottom, and the timelines are in sync. So I think this strategy is that when the volatility is high, right, you buy. When the market is fearful, you be greedy. But the important thing is you don't go all in when you're buying this. Because if you're always in a position of having dry powder on the sideline, being able to deploy, then it doesn't matter if this VIX is the peak, right? Even if it's not the peak, that's absolutely fine, because nobody knows where the peak is. But just make sure you have buying power. One way to get buying power is by using a margin account. So you can borrow money against your portfolio. Let's say in the future, if the VIX goes higher, right? This is not the peak. While the price continue to go lower than the level you purchased the stock. That's when I think you can continue to buy more stocks while the price is on the way down. So one caveat for this strategy is that this is meant for long-term investor, meaning that if you are going to need your money in the next few years, I don't recommend you to put your money or deploying your money into the stock market, because stock market is considered high risk asset.